Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com. Disclaimer: Token Metrics Media LLC does not provide individually tailored investment advice and does not take a subscriber's or anyone's personal circumstance into consideration when discussing investments, nor is it registered as an investment advisor or broker-dealer in any jurisdiction. Information contained herein is not an offer or solicitation to buy, hold, or sell any security. The Token Metrics team has advised and invested in many blockchain companies. A complete list of their advisory roles and current holdings can be viewed here at tokenmetrics.com/disclosures.
All right. Hello, everyone. Welcome to the show. I'm Ian Belina, and today we have the pleasure of being joined by Hey Matty. Matty, how are you?
Hey, Ian. Thanks for having me on. I'm doing great. Appreciate it.
Awesome. Yeah, so for those who know me for a while know I'm a big fan of Hey Matty. He's also a big fan of ours. Matty, so tell us, who are you?
Well, I have a pretty extensive background. I'm from the Philadelphia greater area. Went to school for computer science. I worked in software quality assurance engineer for about 5 years. I did Selenium architecture and C# development. I also mixed around with a little bit of web development, so kind of like full stack, SQL, markup, etc. From there, I pivoted over into a career in professional poker. Played online. It was all post Black Friday. For those that don't know about Black Friday in this industry, even though we do have a lot of poker players, it was essentially when the government pulled the rug on Full Tilt Poker and Poker Stars, which were the main poker suppliers at that time. So in my era, it was kind of a lot harder because our marketplace had been removed, which was the softest poker marketplace in the world, the United States. So once that kind of got removed, things got a lot harder. We had to kind of go offshore if we wanted to play poker on like sites like America's Card Room and Ignition. So I kind of came up in an era of poker playing where it was much more difficult to make money. From there, I kind of fell in love with Bitcoin. I had done some experimentation in my computer science day with some mining and stuff, but there wasn't a lot of information on crypto back then, and it was a lot more difficult to try and like understand what I was even looking at or what even Bitcoin was. I feel like Bitcoin's narrative has evolved a lot since 2008, and the majority of that evolution came from the 2017 bull run. I think there was always this feeling among people of Silicon Valley and New York primarily that felt that Bitcoin was going to change the world and be this decentralized currency. I don't specifically see that vision being true anymore. I think the big push right now is digital gold. And I don't really care about scalability either because I think that Bitcoin does what it does extremely well. There may be a point in time later where that becomes more relevant when the volatility of Bitcoin is less extreme. So to the point where business owners aren't impacted by a 5% slippage in a single day. And when a network can actually handle that level of transactions. But there's no reason to think that we can actually handle those levels of transactions currently while still maintaining the decentralization that brings the actual value to Bitcoin. But back in 2014, I had to essentially fund my poker accounts with Bitcoin the way it was originally intended. The government had essentially created the UIGEA Act and made it very difficult for us to use our banking operations to fund our poker accounts with these offshore sites in third world countries like Costa Rica, etc. So to circumvent that, because it still wasn't illegal to play poker in the United States, it was just illegal for banks to transfer money to those poker sites. So to circumvent those regulations, I turned to Bitcoin because the government can't control that. So it was a direct experience, in my opinion, of the true value that Bitcoin brings, where a government tries to tell me what I can and cannot do with my own money, and I tell them to go screw themselves. From there, I was streaming on Twitch for a while. I was doing poker streaming, and it was like one of the first poker streamers out there. That was even before Jamie Staples was coming up, who's now doing a big YouTube push right now. Back then, I think it was like Jay Carver Poker, and I was part of this company called Set Over Set Poker, but I had originally split from them, and I had a partner. That's why my Twitch stream is partnered right now, because I was one of the original Twitch streamers. They were partnering anyone who was doing poker streaming at that time because it was originally illegal because of the regulations. But when states like New Jersey and Delaware and Nevada started passing these regulations to say that we could have state-based online gambling and it'd be legal, Twitch started budging a little bit and letting us have a market for ourselves. Now that market is huge. Some of the top streamers are getting several thousand viewers a day trying to watch their favorite poker streamers. From there, I kind of pivoted over during the 2017 run because I saw that I originally saw your channel actually, and I saw that you were doing, all this content about how to become rich before you're 30, and that kind of appealed to me at that time. But mainly what appealed to me was in July. I think you were talking about, this is July of 2017. I think you were talking about ZRX and DNT at that time. And I was like, okay, well, how do I get into this? I had to figure out how to buy Ethereum or whatever, because at that point I had only been dealing in Bitcoin for my transactions. I didn't even know about hardware wallets or anything at that time. I was just learning everything fresh, more than what I had already known. So I invested into ZRX and DNT, and I recall specifically, I think it was with ZRX, I was literally signing up for multiple whitelists, buying the tokens, selling them for 3x on Ether Delta, and then investing that money into new whitelist for that. And then similar with DNT, because there was no, DNT is District 0x, but there was no KYC at that time. Those companies were selling to the US. So I could still get into those. So I had turned, I was like, oh, I'm just going to throw a little bit in. I think I threw in like $500 to $1,000. And during that course of the 2017 bull run, and even into part of 2018, I turned that into a lucrative sum, about 6 digits plus.
Yeah. Oh, wow.
So, yeah. And thinking back on it now, I'm like, okay, well, I could have really went full on in, but I know a lot of people who were throwing, back then, shout out to Dream Team and King Nick and all those dudes, people were throwing around 6-figure investments into some of these projects, and they're multi-millionaires now. So, I could have hit the pedal to the metal, but coming from a poker background, my forte is risk management. So I was very strict on how much I was going to bring in. And also you had to build trust with these groups back then. People were pooling in ICO pools where you didn't know any of them. I remember I was like, I think one of the first 100 or 200 people in your channel, because I was providing value in your channel, which was really the only channel around at that time. A couple groups invited me in and were like, hey, how about you come into our group? You seem to know a lot or whatever. You can provide contribution. In reality, they were kind of just building these groups to raise capital, because that was very important at that time. Pre-2017, post Mt. Gox, there wasn't really this VC network set up to be able to provide capital for all these projects that were looking to, quote, build their vision, right? And in reality, you were getting a value add, which was that you can make money while supporting some visions that you supported. There's projects that I supported where I actually thought that they could actually do something. There's other projects I thought, well, you know what, that could probably just make money. So I think like now that we have this decentralized finance movement going on, I remember sitting in my hotel room in 2019 consensus, looking out and seeing Justin Sun say, dare to defy. It's actually really interesting that, the most successful people like yourself and I really saw a difference between decentralization ideas and actual finance. Because I think a lot of people during that time got attached to these projects and thought that they were the be all end all, when in reality, they were a means to making money while also sometimes supporting your own ideals. And I think that's a very important lesson that the crypto lesson
Now,
learned.
quick question. Did
Yep.
you have any past experience investing prior to crypto?
So I had tried a little bit of penny stock investing back in the mid 2000s, but back then I was like a broke, kid.
Yeah.
And they have all these like laws or whatever that you can't really trade them.
Oh man, I hated those laws. Yeah.
Yeah, it's like a
4 or 5 times in a week.
Yeah, you can only trade like 3 times a week or whatever, unless you go to a broker offshore. Excuse me.
Yeah.
So it didn't really pan out. So that's really the only thing that I've had from an investment perspective. But as a computer scientist, we are trained to search for information and dissect valuable information from invaluable information. So, when I go to my job for SQA or whatever, my boss doesn't even want to hear from me. All he wants to do is tell me what to do, and then I go out and do it. If I don't know a language, I go out and do it. I learn it, I find information online. I use abilities to research or whatever. One of the interview questions on my interview when I took that job was, what do you do if you don't know something? And I kind of like took a step back because I was already killing that interview. But I was like, I'm not really sure what you're even talking about. And he was like, well, the answer is to Google it. Right. And I was like, oh, okay. Because there's this big disconnect that happens in school. When you're in school, they don't want you to Google any information. right? But when you go into the real world, it's all about not reinventing the wheel and just reusing what you can. So I actually think that, plagiarism laws and that whole push to make sure that people aren't plagiarizing things, I think that's a detriment to people in my field, because when they get onto the real world, all they're going to be taught, I mean, we're already doing it anyway in school in a certain way, but when we get onto the real world, all we're being taught is how we can search information and digest that information into actual, implementation. So when it came to getting into the ICO boom, a lot of the information that was valuable was already out there. Risk management was already out there. Kelly criteria was already out there. The .com bubble was already out there. So you could look at a lot of different previous historical examples and an entire finance market. And I find that crypto does that extremely well, was that it takes old ideas and refactors them as new. There are some revolutionary ideas, but a lot of the stuff that happens in crypto, it's just something that already happened. Like IEOs, I can't remember what it was specifically on, but IEOs were like some sort of offering thing that not only was already happening in Korea before it even blew up, but it was based off some other model that had been used in a previous time, I think during the 90s.
Right.
So,
Okay, so let's talk about risk management. And
yeah.
how does your background as a poker player help you with that?
Yeah, so when I was a cash game poker player in terms of risk management, so it's different for cash games and tournament players. With tournament players, you're taking on a lot more risk because you could like blow 10, 20 tournaments without actually cashing. And when you make a deep run, it's very important that really, it's actually kind of weird. You're playing for like 4 hours, 6 hours in a tournament. So by the time you even get to a final table or something like that, you're pretty gassed mentally, right? But that's the time that you have to execute the most. So while most players are going to be sitting back and being passive, I'm going to try and be very aggressive and push my edge. Because if you don't have an edge, you're an idiot, right? That's the way I look at anything in life. If you can't specifically identify your edge, you're a fool, right?
Right.
And that rings true, I think, to a lot of different things. But in a tournament, me being more aggressive, knowing my push shove ranges or whatever, I'm really trying to take the top 3 spots. And this kind of plays into the risk management advantage, because when you make a final table, you really want to hit those top 3 spots because the payout structures are bigger as it goes up in the tournament. If I'm min cash, that's only like 2x or less. But if I hit a big tournament, it could be like 50x or more, right? So with tournaments, you typically want between 100 and 250 buy-ins, which is a lot. If you figure you're playing $200 tournaments, you can do the math on that. It's a lot of money. But if you're looking at cash games, you can stand up from the cash game at any time. You can rebuy your stack. There's a lot of different variants that are relevant to your risk management. But at the same time, it's also, you can just fold pre-flop. The blinds aren't going up. So the amount of money that you're risking is only the one buy-in that you sit down. So I would always tell students that I would coach back in the day that if you were playing lower stakes, like kind of ask yourself, how much am I making per month at a job? And then kind of ask yourself, well, how much, if I lost a percentage of that paycheck, how much would it be until like that would hurt me? Like I would feel that my mental game was not in a good place. So for me, if I'm making like $2,000 or $3,000 a month from my job or whatever, and I lose like 10 buy-ins at 1-2, that's $2,000. I'm probably not paying the bills that month. So that would probably tell me at that point that you should be playing a lower stake. And that could also relatively shape how many buy-ins you need for a specific level. So for me, the amount of money that I was making at that time for my development job was like down at 50 an L, 25 an L, which is $50, $25 buy-ins, 25-cent big blind, 50-cent big blind. I would only need like 30 or 40 buy-ins, because 10 buy-ins would only be like $250 or $500. I could replace a 10 buy-in swing pretty easily. But when I went up to 1-2, I'm facing better players. Better players mean lower win rate. Lower win rate means higher variance, because if I'm a 4 big blind per 100 winner and I'm losing, I go through a 50K losing stretch, like 50K hands, I could actually break even or worse. But if I'm a 7 big blind per 100 winner, it would be, even during my worst days, it'd be very hard to actually lose money. So when you're looking at it from that perspective, when you start facing better players and you start moving up in stakes where the money's more relevant, you really need to keep your mental game in check, but you also need more buy-ins. So at 200 and now, I think my comfortable limit was like 50 buy-ins, and at 500 and now I needed at least 100 buy-ins.
Now, so how do you apply that when it comes to trading in crypto?
Yeah, so trading is going to be specifically based on your strategy. So there's a lot of different things that are involved in trading, such as risk to reward and your overall bullets. So as a rule of thumb, when trading, you probably don't want to lose more than 1 to 2% of your overall bankroll on a trade. And if you can help it, especially in this market, you don't want more than 4% of your overall bankroll on margin. And the reason being is because you could experience something like what happened with XRP the other day. And that actually really hit home to me because I was in an XRP trade 24 hours before that flash crash happened. And that's another thing. Like, you start picking up all these things as you're trading. The people who got wrecked on that didn't get liquidated. The people who got wrecked on that had their market stop as last instead of index or market, which means that the liquidations are prioritized off of index. It's prioritized off of Coinbase and whatever other exchanges they have built in. And if for some reason one of those exchanges went offline, like they did with Deribit or something, then they would be required to use their fund to compensate you because it's an unexpected event in the market. But what ended up happening with BitMEX is that someone was able to just push through the lack of liquidity because they just had this new XRP contract on USD, and there's not a lot of people trading USD. So they were able to just push down the price, and anyone who had a market at last price who was using the BitMEX price pretty much were lagging, and their market orders hit at a 50% loss. And on 2x leverage, that wipes out whatever you had on margin. So I always only have 4% on margin, 2% for my stop loss preferably. And that's of my overall bankroll. That's not the actual trade that I'm making. Like, for example, on Bitcoin today, my trade would have happened at something roughly around 97.60. And I would be looking at a stop loss of about 2.6%. The reason being is because that stop loss is above a critical resistance. And when I look at that 2.6%, I want at least 2 to 1. So I want at least 5.2% on my profit. Now, there's a lot of game theory stuff that also is involved in that, such as, like, for example, the 5.2% profit target is actually between the 1 and the 1.236 Fibonacci extension tool. And that 1.236 Fibonacci extension tool is actually correlating with the liquidity zone below a previous price structure. So therefore, instead of saying that I'm going to go 5.2 to 2.6, which is 2 to 1, it's actually going to be closer to maybe 7.5. So I might be 2.5 to 1 on my risk to reward ratio. The goal here, not to sound too technical, the goal here is that every trade I want at least 2 to 1 ratio, because at my worst moment, I expect to win 2 out of 3 in my trades. And if you can always win 2 to 3 out of 2 out of 3 of your trades, then on your 2 trades you'll win 10%, and on your 3rd trade that you'll lose 2.5%. So I'll net 7.5%. So trading, even though you need to develop a system to make sure that that's happening at that frequency, trading really comes down to probability and really maintaining a discipline and a mentality to do so. But back to your question about the bankroll management and how that implies into the risk to reward ratio, is that look at how often you're taking trades, right? If you're day trading, which means that you're closing your trade before the end of the day, then you're most likely taking multiple trades a day. You really need to be strict in a day trading environment, especially in this market. I actually think this market is much more inclined for swing trading, multi-day trades. And the reason for that is just because of you can't really use more than 10x leverage in crypto. And I can go into that if you need me to later. But it's just very difficult to really fall into those confines that I really described as a day trader. And there's a lot of like marketing that you have to get into, like market trades, and a lot of fees. And there's not really a lot of competition for you to broker your fees like you would in the traditional Forex market. There's all these offshore brokers. You can go to them and negotiate your fees, tell them you're a high volume trader, tell them that you're going to be there for a long time. And there's a lot of them out there, so you can play them off of each other.
In crypto, you can't really do that.
No, there's just Shitmex and Bybit and Deribit, pretty much, and FTX. Those are really your.
So let's talk about the 10x leverage comment you made.
Yep. Yeah. So This pertains a little bit more to the fair rate contracts, so some of these altcoin contracts. So when you trade on BitMEX, you're typically trading on a perpetual contract. Now, if you trade on ETH H2O, which I believe is a Bitcoin contract, that I believe is fair rate. And if you trade on any of these like quarterly contracts or whatever, I think those are fair rate as well. But fair rate specifically refers to the Bitcoin contracts on like Litecoin, XRP, Tron, whatever. And you'll notice that your liquidation fee is not, or your liquidation price is not actually minus 100% ROE. And minus 100% ROE would mean that if I lost X amount, that would be equal to 100% of my margin. So it's about a 14% difference. So if you're looking at, like I took a trade, I forget on what pair it was, but the entry was 0.000051. We'll just say 51, just assume the zeros beforehand are relevant. And as soon as I get into the trade, the index price is always lagging. So the index price is what prioritizes liquidations. So right out the gate, my index price was fluctuating between 4.8 and 4.9. The leverage was 15x. So my liquidation was 4.4. So right out the gate, I come in at 5.1 on a market order because there's no liquidity on this contract, so you have to mark it in. I'm at risk now because my index liquidation is 4.9 and my liquidation price is 4.4. But with 15x leverage, that's about 6 point whatever, right? If you divide 100 by 15, it's about 6 point whatever. If I actually lost 6 to 7%, which I would need in order for that to be 100%, it would actually be down at like 3.4 or something like that. So there's already this 14% difference between where the liquidation price is and where your actual ROE price is. So if you, like most of my trades, and this is another thing I wanted to touch on during the risk management system, is that your risk management system should also be based on how frequently you're taking your trades and what your average risk to reward ratio is. So for me, my average trade loses on a losing trade 2 to 3%. When I set up my trades, my stop targets are somewhere between 2 to 3%, unless I'm on an extended move, and then it usually goes 2.5, 2,
Now,
and then 1.5.
so this is for Bitcoin pair, or this is for
this is typically for Bitcoin and Ethereum. Ethereum can be a little bit more trickier because you're more. I day trade Ethereum a lot more, and I was happy that you actually brought that up. I wanted to talk about that at some point, which is that Ethereum is the pair to trade right now, not Bitcoin. You may, like for example, this trade right now on Bitcoin opened up on February 24th, 0, 100. This trade might not complete until February 26th, 1200, February 27th, 1200, something like that. And then I may have like an intermittent period. Like what if a trade doesn't pop up? You know, there may be a period of time. So I may be like only getting like 2 or 3 trades a week on a swing trading system. On Ethereum, there's like multiple trades in a 3-day period. So you really want, like I use ATR a lot, and that's how I determine what time frame I'm trading on. ATR stands for average true range, and it essentially determines what the average price is, the price movement over the last 14 candles. And what I'm essentially doing is I'm looking for when price shifts against the trend, a certain number of ATRs, because that tells me that something important is happening, right? It also tells me where distinct levels are, because it says, well, if price moves to this level, this is where I expect liquidity to be. So there's a number of different concepts that kind of play into average true range that can determine when we should be expecting shifts in the market, both micro and macro. So kind of back to, you know, Bitcoin versus Ethereum. Ethereum on average is typically trading for me on my system between the 30-minute and the 2-hour. So that's going to tell me that I'm getting a lot more trades than Bitcoin. Now I'll look for trades anywhere, but I prefer to stay on those 2 contracts because that has the most liquidity, and I'm paying funding versus fair rate. So that can also give me an insight of what's happening in the market.
What exchanges do you typically trade on?
Yeah, so I typically trade on BitMEX. It's really just a preference thing. Number one, BitMEX is number one in the market. So even though BitMEX has a target on its back in that respect, right? Like, what's his name? Arthur Hayes is always on CNBC. You know, but I think at some point he has to be in contact with the SEC or the CFTC, whoever's in charge of that, probably the CFTC. But they have the most to lose because of the industry leader. They have a gigantic fund. Even though I think that there's a lot of BS that happens on there, you can have BS happen on any exchange. Now, I do think that an exchange should represent, like especially a leader like BitMEX, should represent how things should be done. So if you look back at Deribit, I talked about that before. When I think what happened was that Coinbase had a scheduled maintenance, and they were still using Coinbase as the indice for the index price. So all these people got liquidated. Back then, they replaced that. They paid out of pocket for that. Not only because they had to, they would have been out of business. I think that was Deribit.
Deribit? Okay, that's nice.
Yeah. So the reason I don't use Deribit specifically, and it's probably a stupid reason, is that I don't like the UI. It doesn't make sense. Like coming from BitMEX to Deribit, the UI doesn't really make sense. Like they have all these weird stuff. My friend uses it. Like it's like different wallets, and it doesn't. They don't use the same leverage system. It's a little bit different. Bybit is a lot more in par with what BitMEX's UI and how futures, how I understand it, work. But I just haven't used Bybit, even though everyone's showing their affiliate link everywhere.
Yeah, Bybit has been showed to the moon. Okay, so next thing I want to talk about, I have seen some streams of yours.
Yep.
You have a very interesting chart layout. So you use, I believe, Renko?
Yes.
Renko candlesticks. Can you kind of walk us through how you structure your chart layout?
Yeah, so I do use regular candlesticks and Renko. I'm using the regular candlesticks because that's going to be, I can actually see what's happening with price. So the point of Renko is that it removes noise, right? And it does so by painting blocks. And there's two different types of Renko charts. If you were using something like MetaTrader 4, where that's more commonly used in the stock market, which I have no idea why. The drawing system on there is terrible. But I guess you can code stuff, right? They have a like an object-oriented language backend. But if you were on something like MetaTrader 4, it would be a tick-based Renko chart. That means when you say tick, it's like every second or a fraction of a second, data is coming in. So the way Renko works intuitively is that it's a trend-based system. So the blocks are equal to a certain size. You can either use ATR or a traditional flat size, let's say $50, for example, with Bitcoin. And each block that paints is worth $50. The opening and the close is a $50 range. But in order to reverse a block, you need to go 2 times the normal block size. So why is this important? Well, this is important because what you're saying is that when something is trending, which we are, like Bitcoin is a trend-based pair, so it's been permanently trending forever. But when something is trending, it's very easy to continue that trend. And when the trend reverses, it's more difficult. It's actually twice as difficult to reverse a block, right? That's the same on a tick-based chart as it is on TradingView. The difference between the two is that TradingView doesn't feel like keeping tick-based data because that shit's expensive, right? So they used time-based intervals. So every whatever time based, let's say you're on the hourly Renko chart, every hour it checks in to see how many blocks it should paint, like where the threshold was. It also shows you what's called ghost bars. Those ghost bars are how many blocks will be painted when that trigger gets triggered up. It would, on a tick-based chart, it would just show you a partial block. And then on a tick-based chart, once that block met that threshold, it would just instantly paint. So what the time-based interval does is it provides a smoothing mechanism, right? And I always tell people every indicator or everything that you use always has a pro and a con to it. The pro of Renko is that it eliminates the noise. The pro of the time-based Renko is that it provides a smoothing. The con is that you have to wait for the candle to close. So that means that multiple blocks can get painted in a period of time. So what I've done is that I've gone back and said, okay, I want to know 2 things. Where has the smoothing historically done the best? And for me, it's $2.15 on Ethereum and $150 on Bitcoin. And related to price, where do those block sizes are the best in terms of identifying where the price is trending? Because as a trader, I have a few options at my disposal. I either care Well, sorry. There's multiple different types of trading. Or let's talk about market conditions. You're either trending or you're ranging in a market. If I'm on a static time frame, 4 hour, I'm either trending on the 4 hour or I'm ranging on the 4 hour. If you're ranging in the 4 hour, just trade support and resistance. Where you get wrecked is where you break out of the support and resistance, or where you have a swing failure pattern where it goes beneath the support and resistance and then comes back in to that range, right? The opposite of that is that whenever I'm trending, I could use a moving average strategy if I wanted to, hypothetically. Now, for me, moving averages are lagging, so I prefer not to use them. There's better tools out there, and I use moving averages differently than the herd because of the mentality that I bring into what's going on. I don't want to be part of the herd. I want to be separate from the herd. Herd gets targeted by whoever my opponent is from a game theory perspective. I want to be separate from them. Renko also provides me that separation because most people use regular charts. Not a lot of people are using Renko, right? If everyone started using Renko, then we'd have a different conversation.
Right.
You
Okay.
know,
Very interesting.
but just one last point on that because I don't want to go on too long about it. I made the choice that I could either develop a system or three systems, right? One system that identifies when we're trending and ranging, one system that trades trending, one system that trades ranging. I just gave some examples of which support and resistance, moving average crosses, and some sort of system that identifies the difference between the two. The problem with this is that identifying the difference between the two is almost impossible and lagging. Everything that I want to do involves removing lag and being as reactive as I can be. So what I do is I develop the system of where we're trending or where we're not trending based on price, percentage of price and ATR, and then I only trade on the trending timeframes. So therefore, Bitcoin, I'll tell you right now, historically, has been trading between the 2 and 4 hour timeframes since at least 2017.
Mm-hmm.
Ethereum has been trading between the 30-minute and 2 hour timeframes since about the same time. So typically I'll find myself between them, but I've developed an algorithmic system that essentially takes price and multiplies it by a percentage to determine where I should be looking for price movement. I also know what specific range of price movement has been historically accurate because I want to measure the two between themselves.
All right. So let's take a step back. How did you learn to trade?
Self-taught.
Self-taught?
100% self-taught.
Any resources you used?
The best resource, so there's always been a moment. So I'll always tell people whatever they're learning, the high level stuff is probably always the best. Mental game stuff, you'll always find this to be the same because a lot of the information after your first few books and anything that you learn is typically saturated. No one wants to give you the secret sauce that would ruin them from writing more books. So what they do is they regurgitate a lot of information, and then there will be one or two critical chapters in that book where you may learn something new. If you're fortunate enough, you'll find some idiot who's giving away the secret sauce, who isn't really an idiot. He's just has a certain moral compass where he wants to give that away. So you could consider myself an idiot if you want, because I do give a lot of information away during my
myself
live
as well.
So, but some people just really, for me, I really enjoy talking about what I'm doing. So like people were like, well, why'd you pivot from ICOs to trading? Well, number one, I saw the writing on the wall, right?
Yeah.
But number two, I was investing in ICOs during that point. I'm not investing in ICOs anymore. I'm trading. So I've always been someone who felt like me talking about what I was doing reinforced what I was doing while also providing value to other people and perhaps opening business venture opportunities. And I've always found that doing something you love is always the best thing for business. So it works hand in hand in a value exchange. But in terms of what was the original question you had asked? You said
any resources you use?
Yeah. So my favorite resource is a content creation channel on YouTube called No Nonsense Forex Trading, and it's he has an abbreviation for it as well. And this guy is a boss, right? He's not making content anymore. That's how bossy he is.
Mm-hmm.
He made about 160 videos. He's a prop firm trader. His name is VP. He doesn't give out any information, never see his face or whatever. But he has verified that he's a prop firm trader at some big prop firm. And he just talks about how he's in the traditional Forex market, he talks about how all these concepts that we use as traders are irrelevant. And they're irrelevant in the sense that they're lagging or everyone uses them. He builds a mentality. He builds like a rule of ethics for trading. Excuse me. And in the traditional forex market, the way he proposes this theory, and it is a true theory, is that you're in a toy game scenario. Are you familiar with toy games?
No.
So toy games is related to game theory. It's a scenario that is based off logic and information. And in game theory, you're essentially dissecting impartial or incomplete information. You have an opponent, so you and I are opponents, let's say, and we both have the same amount of information. This can go on into chaos theory as well. I don't want to go too far into that, which is essentially that when you have a chaotic opponent versus a non-chaotic opponent, that's where balance is formed. And when you have two chaotic opponents, that's where things are chaotic because they're both using the same rules or something along the lines of that. But his whole theory is that in Forex, it's a P2P game and you're facing a player. And in traditional Forex, that player is the big banks. They're the ones who move the market. Those banks need to move price to a certain point to fill their liquidity, which just so happens to be, if you start thinking about trading in liquidity, things will be a lot easier for you. So they move price to a certain area because they need to fill their liquidity for a big order, right? They know that the price is going a certain way. They may be privy to some information that you're not related to. That's why you're using technical analysis, because that's your advantage over the market. And they'll move price to a certain point. That point just happens to be where the liquidity is. And where does the liquidity come from? It comes from people's stop losses and liquidations, right? So people aren't actually stop hunting you. It's actually the player who you're playing against is moving price to a certain point. So it becomes very important for you to really make sure that your entries are good, in the sense that you have your risk to reward ratio set up, but also that your stop loss is not the same as everyone else. So that's where you're getting your edge from. But what I really like about his overall, course, it's not even a course, his overall biography of videos, is that he talks about algorithmic trading and how we should be looking at indicators. He talks about the dirty dozen, which is essentially like moving average, MACD, all these like basic indicators that were created before Forex was even a thing, that aren't even relevant to our current market. Talks about their cons, talks about how there's other indicators that are better than them, and also talks about how you can build, he gives a framework for a system. He talks about ATR a lot. He loves ATR, but he talks about entry indicators. He talks about two confirmation indicators. He talks about a baseline, which is maintaining the trend when you're trading, because we should be trend traders, trade with the trend, not against it. And then he talks about exit indicators. He puts them all together in a package to say, hey, you shouldn't be doing like end-to-end trading, which is that I just have this indicator and it just looks really good. Also talks about how you should be taking profits at certain levels for your risk to reward. That's really what trading is at a base level, is that you're developing a finite system, right? I have a couple students, and I always tell them the same thing. It's like foundation, process, execution, or no, it's process, flexibility, execution, right? And the reason why I talk about that is because you should have a finite process that I could explain to anyone in a minute, right? Exactly what I do, less than 1 minute. This is exactly how I enter a trade. This is exactly how I exit a trade. These are the confirmations I have for a trade. This is the baseline in which I maintain that trade while I'm managing the trade. It's a very finite process. But trading is not always finite. Sometimes you need to be flexible. You need to use game theory, like I talked about earlier with my profit position sizing, etc. So there's flexibility involved that doesn't get baked into a finite process. So you build the foundation on your house, and then you're dynamic of what you build on top of it. And the most important part is that you execute, because most traders, once they set up everything else, fail to execute. And I've gone through that myself over about a half a year, being like, oh, well, is this trade whatever? You need to build experience. You need to build experience at anything you do. You can't just expect that you're going out there to execute. So just having those core tenets put together, he came along at a time where it just clicked, right? Mm-hmm. When I was playing poker, Doug Polk put out Upswing Poker. That's his big poker website. I had paid hundreds, thousands of dollars into coaching videos, training videos, whatever. And to have the best in the world come along, I just disregarded most of the stuff that was in his course because it wasn't really useful to me. But what really made his course useful was this click moment of a high level of how he is dynamic, of how he studies his opponents and their flaws, and seeing that they have certain attributes within their game and just attacking those, right? So there's always a moment, I think, in any learning, or like when you're learning something, where you find that moment, and it typically has nothing to do with I found the secret system or whatever. It typically always has to do with something that's high level, that really puts things into perspective for you to figure out how you're going to make the changes that are going to make you successful versus a failure. So that's why I really like No Nonsense Forex. Shameless plug.
Awesome. So we'll definitely have to check him out. Okay, so where do you see the future of crypto going in 2020 and beyond?
Yeah, so I have like a pet project goal. It's not nothing I'm developing, but prior to the 1970s, there was the amount of dollars that were in circulation were based off how much gold was in the mints. That was kind of how the economy worked. And I believe in 1972, from the gold standard, they went to an inflationary system. So Bitcoin directly opposes that inflationary system. As of this halving coming up, I believe the inflation will be 2.4%. It'll be less than the inflation of the actual US dollar at the current rate. So what I think needs to happen, because I don't think that, and I'm not making a case for Bitcoin Cash, so let's be clear about that. But I think and maybe Bitcoin Cash can do it, since Roger Ver wants to make that his primary, whatever, making Bitcoin a payment system, is that you need to have some stability within that payment system. Now, I've talked to a couple of hedge fund people who have talked about the fact that, well, once Bitcoin's market cap gets to a certain point, the amount of fluctuations around the dollar would be very similar to the currencies market that we have now, which is that people bet on, like when in traditional futures, you bet on the currencies. He believes that the volatility will be on par with that, making it a more finite currency for business owners to accept. But that could be 10 or 20 years down the road. And Bitcoin already has enough threats down the road, such as quantum computing or whatever, that you would need to kind of solidify yourself now, because you put yourself at risk of something else coming along. Most technological revolutions have a 40-year histogram arc, and Bitcoin came out in 2008. So your height of your currency would probably be around 2028. And if your goal is that you're hoping that market cap hits there between 10 and 20 years, yeah, you'll have that height, but currency has been around for centuries. So you need something that's going to be long lasting. So maybe that's the goal. But I think that you could probably address this now by having some sort of fiat currency that people trust in. And it could be Tether, who knows? It's not Tether because they're a fractional reserve, but some sort of fiat currency that is backed by Bitcoin. And I'm not talking about like DeFi staking with interest, and maybe that could play into it as well, because that's more on the banking side, disrupting the banks. But I think there'll be some sort of fiat currency that'll be tied to the finite supply of Bitcoin, similar to how we did with gold prior to 1972. And the major problem with gold for me is back in prior to 1972, it was a lot easier to confiscate. 1930s, they had a gold run where they confiscated everyone's gold. People store their gold typically in a bank, which is a threat to its decentralization. And on top of that, the banks or the mints and the government were able to lie about how much gold they had in their mints, which was an inflationary risk to the system as well. It was still better than what we have now with fiat, but they were able to lie about it and essentially just print more money based on how much gold was there, because it was never audited. So, I think Bitcoin solves all of those solutions. So right now, I think we could have an actual payment that is flat, but based off of the finite supply of Bitcoin. And if enough people believed into it, then it would be very similar to how the dollar worked before 1972. I think the DeFi revolution is interesting, but it's not something I'm interested in personally.
Why not? Why is that?
Why not? So I haven't done a ton of research on it personally, but a lot of the projects just, it seems very ICO-ish. It seems like a lot of projects coming along being like, oh, we're going to do this, do that. But I think the only thing that really makes sense is Maker. And even that has inherent risk if the price drops to a low enough point. I think Reserve made sense. That's why I talked about Reserve at the 2019
Yes.
convention with Tone Vase. Was really awesome to see look how much they're doing now. You know, they're making inroads in Venezuela and South America. Their price is shooting up. That's always great, but they're specifically trying to make themselves positioned to be opposed to Maker. I think that's where DeFi makes its best argument, which is interest and lending. But outside of that, I think most of the other platforms don't really make too much sense to me.
Yeah, I mean, because I think I'm personally very bullish on DeFi, but I do think whatever currency is going to be at the forefront of DeFi has to be building their own cryptocurrency, not something that's being built on top of Ethereum. So, for instance, somebody sent me DAI last week to pay for dinner.
Mm-hmm.
So I gave him a address I made on Trust Wallet. He sent me the DAI. Then I was trying to transfer the DAI out. I have to send Ether to this new wallet to take out my money. So I think that's additional friction that's not needed.
Yeah.
For mainstream people, because if somebody's just trying to do something small, if they have to go out there and move Ether from other wallets just to have access to this new wallet, I think it's always going to be challenging.
Yeah, if your gas on the blockchain is not based off of the same currency, then you're using two different currencies.
Yeah.
But the way you could solve that without having to go out and build a whole new blockchain is essentially have like the centralized wallet that you would be using. They would essentially just be linked into an exchange and transfer take a fee out in DAI.
Okay, interesting. Yeah, so kind of just have a DEX or some kind of protocol that handles that. Yeah.
It'd probably be like API based, hooked up to Binance or Coinbase. Like let's say Coinbase just came out with their new credit card, right? Eventually, Maker and DAI will probably be on Coinbase, maybe, hopefully. So, excuse me, you have your credit card, your buddy sends you DAI, you go to use your credit card on DAI or whatever. There needs to be Ethereum for that transaction that's going on. Essentially, they'll just say, well, Ethereum is priced at this right now. The amount of Ethereum that's required for this transaction will be the fee for the network. Which, by the way, if you move DAI over to its own blockchain, you'd have to pay a fee anyway. That's just, they need to incentivize that security in some sort of manner for whoever's processing, whoever is the arbiter for processing that transaction, either a miner or a stakey or whatever in POS or POW. But essentially, they would just be like, okay, I'll just liquidate some of this Ethereum and from your DAI amount. That's what happens on an exchange already. Like if I need to pay a fee or whatever on an exchange, it just comes out of, or like withdrawing from an exchange,
Yeah.
it just comes out of that.
But I think that definitely is the way to go. I mean, because Trust Wallet does have a DEX in there. I think they use Binance DEX, so I'm not sure why that's not happening. But yeah, I definitely think that's the way to go. Now, Coinbase does have DAI. They added it recently, I believe.
Okay. Nice.
All right, cool. So we're getting towards the end of the interview. Now we have questions we always like to ask our guests. Mm-hmm. So first question up is, what are 3 books that have changed your life?
Well, I'd have to go into my phone. Someone's calling me. My first, I'll tell you my first book just off the top of my head, and as I bring up my Amazon Kindle, is Jared Tendler's Mental Game of Poker. He wrote 2 books, volume 1 and 2, but the first book obviously had the most information on. A second book built off of it, and it talks about the inchworm theory. And the inchworm theory is almost like a way of life, but it's practical for poker players and anyone who reads it. It essentially says that an inchworm moves like this, right? Mm-hmm. He lifts his back up and moves forward. And the inchworm is a analogy for progress, because the way the inchworm works is that in the front of the inchworm is your A game, and at the back of the inchworm is your F game, and the middle is your C game. Most of the time, you're going to be average, but you have the potential to be great and you have the potential to fail. And if we constantly move like the inchworm and we learn stuff, your A game or your F game today could be your A game tomorrow, right? So it's a really interesting conceptual concept that has to do with progress and really keeps things in perspective, because I like things that have to do with like grounding me, etc.
Very interesting. How to check that out? Inchworm theory, it's called.
He calls it Inchworm. Yeah, it's a Mental Game of Poker by Jared Tendler. There's another specific poker book called Applications to No Limit Hold'em, but I wouldn't recommend that in my like top 3 just because it's very math intensive. It talks about a lot of probability stuff related to specifically with poker. Let me just look through here and just kind of pick. Programmic Programmer was a good one. That's like, these are just books that like I specifically, they're specifically important to me, so they may not be important to the overall,
Okay, I mean, yeah, quite the background. So 2 poker books and 1 programming book.
Yeah, if you're a content creator, YouTube Secrets is a really good book. That's I forget who you probably know those guys. It's Sean Cornell and Benji, whatever his last name is. They're really big in YouTube content creation. They're like pretty much the authority on creating content. So like for me, I'm a real practical book reader. So I specifically find books that are in whatever I'm doing and really try and digest information from there. Outside of there, it would just be like high level mentality stuff, like Mental Game of Poker, etc.
Right. Okay. Next, outside your family and friends, who are 3 people, living or dead, who have inspired you?
That's a tough one. Man, I'm not sure, to be honest. There's no one really that comes to mind. I mean, that sounds a little weird, but probably. So one person is Eric Peterson. Unfortunately, he did kill himself. But Eric Peterson was a folk punk singer for a band called Mischief Brew, and he was from the Philadelphia Bay Area. He sang a lot with another punk band called the Dead Milkmen, who are a more known underground punk band, also from Philadelphia. But he was someone that lived a very modest life, and he didn't really strive for success. He maintained his lane, essentially. Like he understood what his lane was, and he understood that success for him wasn't the same as success for others. So most people, when they think of success, they're like, oh, I want to be rich. I want to have a bunch of money. But for him, success was expanding his music career and providing value for a demographic of individuals who felt disenfranchised by the government and by the financial system. So for him, success was just going out and playing music and not really shooting to be rich, right? And I think that level of humbleness is very inspiring. Now, obviously, I do want to be wealthy, but I think what it really illuminates too is that success does not equate to money. It equates to whatever you make it. It's about setting your own goals and setting defining who you want to be. I think a lot of people out there don't know who they want to be, or they don't feel comfortable with who they are, or they feel intimidated because maybe they're not old enough or they haven't achieved enough or whatever. And I think like he's someone, I just really loved his music, but he's someone also like watching his life. Unfortunately, he did end up killing himself. So it was a little sad ending to that story. He had like a wife and several kids, which kind of alludes to mental, mental depression and stuff like that being a serious issue. But, just the way he lived his life. Another person is Hunter S. Thompson. Hunter S. Thompson was someone who, when George Bush got reelected, he said that his faith in America had been shaken. And he was someone who always believed that, this is actually weird because he also killed himself. I'm not saying I'm going to go out there and kill myself. I don't have any of this. But for him, suicide was not one of depression. And maybe he did have mental illness by today's standards. But for him, suicide was a choice, right? He was choosing when he wanted to end his life, not someone else. And I think he eventually had his ashes shot out of the cannon too, for retrospect. But that's also very inspiring, is that the mentality of control, right? When we think about life at a high level, a lot of the stuff that comes into play, and even I fall victim to this as someone who tries to practice it, it's all about expectations and it's all about what you can and cannot control. Typically, when you dwell on something, like let's say, for example, a friend that's fallen out of your life, right? And they chose that they don't want to be around you anymore for whatever reason. Typically, it's naturally. You kind of start asking yourself why, right? And this is something that I've had to deal with, my wife and others who I think everyone, as they grow older, have to deal with something like this, close friends kind of falling out. And most of it's habitual, I think, but you start to ask yourself why. And I've come to realize that anytime that you ask yourself why, you're losing control of what's happening. You're not the deciding factor. They were, right? That's what hurts so much. When someone dies, they died. You couldn't control it. So the mentality that if you live your life and act on what you can control versus what you can't control, you'll probably live a better quality of life. So I like really respected Hunter just in terms of his like outward thinking, and we all love Fear and Loathing in Las Vegas. It's a great movie with Johnny Depp and a great book, On the Campaign Trail 1972 with George McGovern as well. But Hunter lived a life of what he could control and what he couldn't control. And when he saw George Bush get elected for the second time with the Iraq War, he just felt that he didn't want to live in this world had passed him by. He didn't want to live in this world anymore. So he took control and decided that it was time to end his life instead of growing old and dying.
Wow, that's pretty intense. So
Yeah.
he did it based on the presidency, based on a new president coming in.
Yeah, it was George Bush's second term. He felt that how could America be so dumb to elect Bush a second time? It was pretty crazy.
Now, okay. Now, I mean, so me and you do talk politics a lot, so I guess maybe now's a good time to bring it up. What's your take on the presidential campaigns and how that affects crypto? Because, I mean, quite frankly, I think Trump might win again just based on, historically speaking, no president has lost with the economy this good.
Well, we'll see where the economy's at, I guess.
Yeah.
But also, we haven't had a president that's been. Maybe we have, but this president is very polarizing, right?
Yeah.
And
understatement.
He is, and people can feel the way they want. For me, Trump is a stain on the presidency. I think there may be a handful of presidents that could also maybe carry that flag, but not in the modern day era. I mean, let me just take it a step back and say that I believe that I believe in the military industrial complex, and I believe in paradigms that we have a constant pendulum swinging back and forth between the working class and the rich, or the business sector, or whatever, however you want to phrase it. Back in FDR, I think he was president from 1933 to 1943 or something, like 3 terms. He was like the longest serving president. He was someone who lived through the Great Depression, served through the Great Depression, served through the post-aftermath of the Great Depression, served through World War II, and then died in office. And he was someone that put forth the second Bill of Rights, which I posted in the chat not too long ago. And a lot of these things that he had on his Bill of Rights that would have gotten passed had he have not died are expansions on a lot of things that Bernie Sanders is already talking about. Mm-hmm. And I am a big Bernie Sanders supporter, and I'm not really taking crypto into account when I look at him. I think that for since probably Reagan, since Reagan, both parties have really served the same interest, and those are essentially, the campaign contributions and stuff like that, the lobbyists, the military-industrial complex, all this stuff. And I think this has been around for maybe the better part of 30 years now. It's been around longer than that. Truman wrote about it in the 1950s, I believe it was, and also FDR wrote about it. They recognized that our system posed a systemic risk for lobbyists and money to control our government instead of our government being there to appease the will of the people. Now, prior to FDR, and even going back, the federal government's role wasn't really expanded at that point. So you had like a lot of state rights, Federalists versus Whig or whatever, all that stuff that happened back in the 17 and 1800s. It wasn't until that we needed to start raising a standing army and trying to take care of everyone and having a large enough nation that we started nationalizing a couple things. So I think it's very telling, firstly, that the Culinary Workers Union in Nevada, right? their brass basically said, don't vote for Bernie Sanders, vote for Biden, because Biden is going to let us keep privatized insurance. We fought for this health insurance. We should get to keep it. And what did the people of the culinary union do? They nominated Bernie Sanders as the winner of the Democratic caucus at a 2-to-1 ratio versus Biden. Why did they do that? They did that because they're tired of having to go back to the negotiating table every 2 to 4 years to negotiate their health care in a system that's going down the toilet. In 10 years, all the people who have the Cadillac plan are going to be on the shitty United Healthcare plan that are paying $2,500 in deductibles, which is a Ponzi scheme in itself because no one ever uses it. And then if they get cancer, they're still in debt for millions of dollars. So it's a joke, right? Universal healthcare is working in countries all around the world. People who have diabetes are paying much less in prescription costs for insulin over in Canada right now. It's like $44, it's just $500. This healthcare system is not only broken, but it's behind the world. We're not even in the top 10, right? And that's because of the greed that comes from the medical insurance companies and the pharmaceutical industry. So it's about time that someone came along and stood up to them. If you want to call them socialism, you're just making yourself look like an idiot, right? We have a lot of socialized programs here in the United States, Medicare, Social Security, unemployment, a lot of which we pay into. Essentially, we pay for what we prioritize. And healthcare should be something we prioritize because we're spending twice as much per capita. The other things that he wants to do is college tuition for public schools to be free.
Yeah.
FDR expanded the K through 12 education program. We're now expanding it to K through 16 because you need a 4-year degree to do anything in this economy. If you want your country to be educated and you want your economy to thrive, you need to start sending people to either a 4-year state school or some sort of trade school that's going to help benefit them.
Now, quick question on that. How do you think he should handle people who just paid their debt?
What's that?
Like people who just paid their student loans off.
Yeah. So this is a controversial question. Buddy of mine, Medic, paid off all his. He's from California. He paid off all his student debt, and he kind of was like, "That's bullshit. That people are just going to have their debt forgiven." I think it sucks for those people, but I think that the student loan burden is a bubble and a drag on the economy, and I think that everyone benefits by us not having these massive amounts of student debt. He has the option to go back to school, I'm sure, if he wanted to. But it really comes down to the fact that most people, by the time they're 30, can't even afford to buy a house. Because they have like my student debt, for example. We'll just take me, for example. I did the right thing and went to a state school. The reason why I went to a state school is because I figured that I'd have about $50,000 worth of debt when I came out, roughly, right? My whole idea was that I wanted my debt to only be worth 1 year of income at a full-time job. So when you come out of school for computer science, your salary is going to be between 50 to 60,000, depending if you work from home or not, right? So I wanted to make sure that the debt that I had was less than 1 year of income for the degree I was paying for. I felt that that was a good, risk to reward. I still have student debt, and it's not going down. And the reason why it's not going down is because about 13,000 of it is from Sallie Mae. And the interest loans on that are like 13%. It's ridiculous. And the federal loan is 4%, but it's like 30,000. So the amount that I pay per month is the same for Sallie Mae that it is for the federal program. And on top of that, I'm paying close to like $600 a month. So 1/3 of what I pay for my mortgage is going towards student loans. And it's just not, if you want a car, a student loan, and then still be able to go out on a Saturday night, it ain't happening. You know what I mean? And I'm one of the lucky few, because I'll tell you right now, I look around, I maybe have a core group of friends of maybe 10 to 12 guys, right? Only 2 of us own a house. And those 2, I'm married, and the other one will probably be married. The rest of them still live at home with their parents. And a lot of them still went to school. They don't have the money to move out. So now, that's a drag on the economy.
I mean, so I know even amongst my network, most people either, if they're in America and still single, even if they have money, either they're living with parents or with roommates, or if not that, they're living abroad.
Yeah. I rented for
Thailand,
5 years.
Bali.
Yeah, so abroad's very cheap as well.
Yeah.
But even that comes with its own issues, because you can't be outside of you have to for tax purposes, I think you can only be somewhere for like 6 months unless you get a living visa. So being that's another person you asked me about recommendations for channels. The Digital Nomad, I believe his name is. He
Mm-hmm.
does a lot of content on that stuff, and it's a lot more difficult to live abroad than people think. They just think they can just go and do whatever, but it really depends on the location. So yeah, I think that kind of just taking it back to Bernie or whatever. I think that Bernie is the best, and I think the mainstream media is out to get him too. I thought it was really funny that Chris Matthews had to issue an apology for equating him to war
Yeah.
crimes in World War II, but especially someone who's Jewish.
Yeah.
But I think that not only is Bernie, like I honestly look at Bernie as the FDR of our time. Every 100 years, a transformational person comes along and just changes the way that we think. It just so happens that it's going to be one of the biggest elections of our time against one of the most nefarious people that we've ever seen, Donald Trump. But Bernie is bringing working class people together across racial and religious boundaries. He has amazing support among the Latino community. He's now eating into African American support with Biden, who's trying to say that he has the support down in South Carolina. We're now seeing, because of Nevada, that he was competitive there. He's also competitive among the moderate wing of the party. And I think most people under 65 are fine accepting some of these ideas because they've seen over their lifetime that a lot of this stuff isn't working. The only people who are really against it are people who are above 65. And typically the Democratic voting bloc above 65, they turn up the vote anyway. It's the people who are younger who have issues turning up the vote. But I think that this is a special election where we are going to see historic turnout. We saw the early voting in Nevada was like twice as much as, or like around the same versus the amount of people that came out in 2016 as a whole. So I think that the narrative of the referendum on the economy, I think it does ring true, but we have to look at a few things. Number one, this is a referendum on Trump. 65% of Democratic voters say that they want someone who can beat Trump because they're tired of living in the volatility that Trump brings to the office, both abroad and at home. On top of that, we need to understand that the stock market does not represent the economy. People who invest in the stock market have what? Disposable income. Most people nowadays do not have disposable income. Only an upper class of individuals actually own stock. I don't even own stock, and I live at home and I'm in the financial sector, right? But I also don't buy tops, so just putting that out there. The point being is that the economy isn't doing good. Amazon is erasing a huge workforce that makes up 30% of our workforce. People are having to take multiple jobs. I know people who are working at like Target they just started doing minimum wage. They work at Target for $15 an hour, and then they work 10 hours or less over at UPS just so they can get some sort of benefits because no one's giving out health benefits anymore, and everyone works less than 30 hours, and there's no blue collar workers anymore. This economy is on a string. And people want to point to the stock market making new highs and new highs. The reason why those guys are making new highs and new highs and new highs over and over and over again is because they're the ones who are profiting from the corporate socialism that's going on in Washington. They're the ones who are getting all these tax breaks and all these loopholes and all these kickbacks and Amazon not paying anything in corporate tax rate. The people who are suffering are the workers. And that's where the economy is struggling. So if we want to have a referendum on the economy, we're nominating the right person by nominating Bernie Sanders because he's someone that's saying, hey, the economy isn't all right. And the people who voted Trump in Michigan and the Rust Belt, they know that too.
Okay, I mean, well said, well said. I think it's definitely going to be a very exciting election.
Yeah.
And some people are saying this could really be the beginning of the end of the Democratic Party as we know it, and it turning into something new because Democrats are divided on Bernie, and he's really trying to almost blow everything up and reset. And I mean, that's why the establishment like MSNBC and others have really been against him. I mean, because I was actually pro Bernie last time he ran, right? And I definitely hated how really Clinton stole the election from him.
With the super delegate, same thing.
And the DNC basically endorsed that, right?
Yeah.
So ever since then, I've really not even liked the DNC that much. I mean, I'm still progressive and liberal, but I classify myself more as an independent nowadays, right? Because at the end of the day, I feel like the system does need to really.
It was very disenfranchising what happened, especially with Debbie Wasserman Schultz. I was a big Bernie and Donna Brazile too, which I was very shocked by that. Donna Brazile took over after her CNN contribution. She took over as the interim head of the party, and in her book, she writes about them doing things to Bernie during that time period. And I think Hillary needs to go somewhere too, because she's been out on the campaign trail, talking trash or on her tours, which is very like it just shows how scared they are. I had a Bernie You're Our Only Hope Jedi hoodie back in 2016 and donated a lot of money to his campaign, several $100s, which is a lot for me at that time. So I think I definitely agree with you. I think that when Bernie takes office, the whole Democratic Party is getting reshifted. They wanted to bring him into the fold post 2016 to kind of get behind Hillary, and he enacted a lot of changes then, such as with these caucuses putting out the popular vote. Also how the super delegates now work. They're now on the second ballot and a lot less influential. Unfortunately, Bernie is not going to win outright. We haven't had a nominee win go to a non-contested convention since 2004. I think with John Kerry. So historically, since politics have become more diverse and polarizing, it's going to be a contested convention. But Bernie should be, if there's even a moderate challenger, Bernie should have a few hundred state delegates ahead of whoever he's going in there against. So for the DNC to overturn that, they'd be pretty crazy. Also, Bernie is now proving to those establishment Democrats that he can be competitive in the moderate lane. He can be competitive in other demographics as well with minorities. So as long as, this is why I think he's the best candidate, he's building grassroots support with an unlimited funding avenue and reaching across multiple different barriers to bring people together for a coalition. That's what you need to beat Donald Trump. When Bernie lost in 2016, I wrote him in for president because I couldn't vote for a crook such as Hillary Clinton.
Uh-huh. All right. Well, last question, then we'll end the show. What are 3 actions you took that have changed your life?
So one action is I have a notebook. I felt like as an entrepreneur, someone who works for themselves and has a lot going on between content creation and trading and whatever I'm doing, raising a family, that there's so many things that you think about throughout a day, and thoughts are very powerful. One thought, acting on one thought can change your whole world.
Absolutely.
And this is kind of 2 of them in one. One of them is credit to my friend Medic, who I talk to every day. But people who are successful, they train for a few select moments in their life, right? When something comes to you, do you want to be someone who's not ready, or are you going to be someone who's ready to act, to execute, right? So every day I try and train myself just to be ready to execute thought exercises, whatever, and always interpreting things that come in. A new idea, like the cannabis industry, for example, would have been a new idea that came in. Had I have acted on it, probably would have made a lot of money. Like there's a lot of things where I think of like for example, there's an application I'm using right now called Noom. It's a diet application. And I think that that's not financial advice. It's probably, they're still pre-IPO, but at some point I'd like to own some stock in Noom because I think that they're...
How's it spelled?
Noom.
Okay, I'll check that out. Haven't heard
So it's essentially like a support app. They do recipes and keep track of all these things, and they also educate you. So I had a buddy that was lifting in 2008, big like weightlifter or whatever, and his whole thing was, he said all these dietary programs are kind of BS. They work for some people, but most they don't work for. And he said that the trick to dieting is really about caloric density, right? So the concept of caloric density is that a quarter pounder with cheese, eating a quarter pounder with cheese to your stomach is the same thing as eating a quarter pounder of lettuce. If I had a quarter pound of lettuce versus a quarter pounder with cheese, they'd both be a quarter pound in my stomach. The difference is that most of the lettuce is in water weight and that it's healthy for you. So the concept of the diet is that you're making things that are high in caloric density, but still getting the nutrients that you want every day, right? And what they do really well is that they do quizzes and education exercises. So every day you're learning something new about health. And I think that that's also a distinct difference, is that I don't want to be on a system that's just me following a routine and not learning anything. Because if you can understand something and explain it to someone else, then you're more likely to enact changes in your life. So I think that that's a really interesting concept. But the higher point is that you should always be ready to interpret information and execute on it. And I think this is kind of twofold, which is that if you're always ready, then you'll be ready for those few moments in life that'll catapult you to success of whatever you're trying to aim towards. The other thing is that I keep a notebook next to me because you only retain about like 60% of information like immediately. And then over time that brain retention kind of slips off. So I don't want an idea to come into my head and me not act on it. So what I do is I always keep a notebook with me if I can. Sometimes you can't bring a notebook with you everywhere. But I always keep like a Stato notebook with a pencil. And whenever something comes to my head or whatever, I write it down.
Got one right here.
You got it right there. And it's
Yeah.
just been such a game changer. And like every morning so number one, or I have the third one ready. I just thought about it actually. Number one is that every morning around like 7 a.m., I take everything I wrote from the day before that are non-actionable items, meaning like sometimes I'll put stuff down that I have to do today, take out the trash, whatever. You know, I have to be at Ian's interview at 1 p.m. I have a calendar or whatever, but I also put that down just to remind me. So if I didn't make a calendar event, but I write everything down and I separate them into categories. So some of them are like longer term goals. You know, like one of my goals is to go to Italy, right? That's a longer term goal. But if you're constantly setting goals for yourself and writing them down, you're more likely to achieve them versus like, yeah, I'd like to go to Italy someday. That's not very actionable. So what I do is I have different categories such as like long-term goals, things I want to get done that week, like clean my office. It can be mundane as that. But just the process of writing them down and then compartmentalizing them into different categories and listing them in terms of importance is a process that I think helps achieve things and get through the day-to-day activities. But it also, I make sure that I have to address a certain specific number of them each day. So let's say, for example, I have to accomplish the top 3 tasks, right? And by listing them in terms of priority, I'm getting the most important things done all the time. And then if I have extra time or I'm not doing anything and I want to pick off some more of that list, eventually I'll clean the list out, right? So I think that that's been very helpful. And I just think that waking up, like being on a sleep cycle, I've suffered from insomnia and work shift disorder for a long time. When I was a teenager, I was a lot more poor, and I worked a minimum wage job at a newspaper factory while I was going to school. So it started where like I'd work from like 7 to 11. It was a part-time job. Then when the newspaper industry started going under, a lot of the local papers, the county level papers, started picking up additional things that they had to print out, like consolidating different papers. Eventually, they just outsourced it. So it went from this job where I was working from like a 7 to 11 to like 5 p.m. to 5 a.m. And the machinery was breaking down. So some nights I'd be there till 8 a.m. So I was literally for like 2.5 years working night shift, like graveyard shift and night shift. And that really takes a toll on you, I think. So now that I have kiddo, I basically, especially when my wife goes back to work, I'm the one that's going to have to watch him during the day. So I have to be up by a certain time. So I'm doing a really good job of it, limiting my blue screen time and all that stuff, where I'm trying to wake up around like 5 to 6 a.m. And that's probably the perfect time to wake up because you have that 2 hours of reflection. You can do whatever you want in there. You want to do yoga, go for a jog. I've tried them all, right?
Mhm.
And that period of time of reflection, no one else in the world is really awake or everyone's waking up. So it's really nice to just watch the sunrise because you only get so many in your life that you'll actually see, and just be on that schedule where you have routine. Because if you can't keep that schedule, you can't have that routine or whatever, then you're not really expanding yourself to the maximum potential that you can provide for yourself for your goals. I've also found myself that I'm not really partying anymore, not really going out and drinking. I don't mind going out and having a good time, but it's not a priority for me anymore. My priority is like I'm a little bit over 30 now, So I'm trying to get to a certain point by 40, right? Your whole thing was be a millionaire by 30. My whole thing is that I have it all figured out by 40, right? Because
Yeah.
I think everyone's going through that process of, figuring it out, and you're never done either. Life changes, new hurdles come into play, but taking the steps forward to put yourself into the best position for the success, I think, is the most important part. So those are kind of my three.
Well said, well said. So just to kind of add on to that, so one app I do like as well that I've had good success with for health and fitness is called Lark. That's Lark. It's like a chatbot.
I've
That really
heard of that.
Yeah, so it's a chatbot with a subscription model. It just walks you through your day. You just tell it the food you had. It kind of gives you feedback on what's good and what's not. And I learned a lot about health just from that. I've also been doing some intermittent fasting, and that's actually worked out well for me. That plus some keto here and there. And for the most part, I'm vegan nowadays. I would say mainly during the weekday. On occasion, when a friend is in town, I'll go out and have some meat, right? So the technical term is flexitarian, but basically at home, I skip breakfast, I skip lunch, I just have dinner. I have one meal, maybe a snack. Just eating healthier, and I've lost over 20 pounds, over 25 pounds. So
you look a lot leaner.
Yeah, thank you. So then,
have you heard about the water fasting now? Everyone's doing these.
Fasting?
People are drinking water.
Just drinking water?
No water. So I think Tony G just did like a 13-day water fast where he didn't drink water for like 13 days. I don't know how they get away with that. Most of them are going to retreats for it, but they say they feel like amazing after it.
Okay, that I've not done.
That's the new craze. Everyone's trying to fast something.
Right. And then having a notebook, I began doing that in 2019. I have a notebook with me every single day, everywhere I go. Well, at home, in the house. And it's one of the best things I've done. So I just put in my to-do list every single day. And it's a rolling list. So whatever I cross off gets crossed off. Whatever remains carries over to the next day. So each day I make a brand new list and just add the items from the prior day that I didn't finish on that list. And then just being able to because my thought process, I think like 1,000,000 miles an hour.
Yeah.
Right? And sometimes being able to take what's inside my head and put it on paper and maybe even draw diagrams helps me really understand what I'm doing even more. So having that notebook has been very beneficial. I mean, sometimes I'll be washing the dishes and an idea comes to me. I'll stop, go upstairs and just jot that down.
The shower is my big, I take extended showers just to have that time, that personal time. And like, that's a very personal thing to me is like me going in the shower or whatever, because it's just therapeutic. But I always have like some of my best ideas in there. So coming out soaking wet, having to like write something down is always a pleasure. I also think like kind of what you had said, actually writing it down is a lot different than typing it out. Because you're like, for me, from a mental perspective, you're giving it the attention it deserves, because most of us type now. So like if you're forcing yourself to write it down, then you're like taking that extra bit of priority to say like, this is important, right? Because I've done the list digitally. Where I try and like type it out. I never do anything.
Yeah. It's actually, speaking of that, I haven't checked my Asana list in a while, but this list,
Gotta get to it.
All right. So where can people learn more about you?
So you can check out my YouTube channel, Oh Hey Matty. I'm on Twitter as well. I think it's me, Oh Hey Matty. I'm currently working on a trading course, a Renko trading course, to kind of encapsulate all the information that I talk about on my channel on a daily basis. And also that'll include some of the indicators that I've created on TradingView, such as the ATR threshold measure and a couple other slope magic and trend terminator as well. So yeah, that'll be coming out probably hopefully in the spring, by the early spring. And then maybe I think, one of my goals on my list is to write a book about Renko trading in crypto and see if people are interested in it.
All right, awesome. Well, definitely keep us posted on that.
Yep.
Well, thank you for coming on the show, Matty. It was great. And as usual, everybody, be sure to like, subscribe, and share with your friends. And as we like to say, the moon is not the limit, to the moon and beyond. Until next time.
Nice.
Thank you. Since the creation of the internet, every industry has been turned upside down. Amazon changed retail. Uber changed transportation. YouTube changed video forever. With the invention of crypto, money is next. At the speed technology is growing, the future of money and securities are digital. 9 out of 10 millennials do not trust banks. The value of money relies on trust. Government debt is higher than it's ever been before. Central banks continue to print money. Fortunately, the world has a new solution. Experts predict in 7 years, 10% of the world's economy will be in crypto-based assets. Today, 1 billion people have access to the financial industry. Crypto is about empowering the other 6 billion people by banking the unbanked. Do not underestimate this. Do you wish you invested in Google, Amazon, or Netflix before anyone ever knew about them? $1,000 invested in Netflix turned to over $500,000. At Token Metrics, we help you find the next Netflix. Token Metrics users think differently about investing. They are early adopters looking for financial freedom. They are people who see a better world. A world without international borders. We believe in a world where everyone has access to the next financial revolution. At Token Metrics, we are creating a bridge that gets you to that revolution. We will help you make sound investments in this new world. The world's best investors do not rely on their intuition. They embrace technology and AI to invest. Token Metrics uses AI to find invisible patterns in data to help you invest and trade in crypto. In the past, we have used our data-driven system to achieve financial freedom. Now, we are giving you the keys. We created Token Metrics to be the only platform you'll ever need to make money in crypto. We give you AI and access to crypto experts at the best price. The moon is not the limit. To the moon and beyond.
Disclaimer. Token Metrics Media LLC does not provide individually tailored investment advice and does not take a subscriber's or anyone's personal circumstance into consideration when discussing investments, nor is it registered as an investment advisor or broker-dealer in any jurisdiction. Information contained herein is not an offer or solicitation to buy, hold, or sell any security. The Token Metrics team has advised and invested in many blockchain companies. A complete list of their advisory roles and current holdings can be viewed here at tokenmetrics.com/disclosures.